This is Andrew Stotz of Stotz Investment Research, looking at Korea, which is still, to me, most attractive in Asia. Why would it be attractive? Let's take a look. There's 4 parts to the way I look at a country, and let's start with the GDP. First, we can get a picture. The blue bar is the GDP over the last 4 quarters. And you can see that it's grown by about 2.79%. So nothing major, but not bad. At least it's positive. So it's relatively slow growth in Asia. And it's mainly driven by, we can see, private consumption. Private consumption grew by 5.8%, and it's 50% of GDP. Therefore, 2.89% contributed to GDP. The biggest laggard was exports, which were down about 1.5% as a component of GDP. So a strong domestic economy, weak exports. All right, let's take a look at the overall market right now. And as of right now, Korea has an acting president, and it has 51 million people. Per capita GDP is about $27,000, which makes it a developed country from a per capita perspective, but from a market perspective, MSCI still considers it emerging. Why? Well, part of that's due to restrictions related to the trading of shares by foreign investors. Now, we can see the market cap of the country is about 1.5 trillion US dollars, and it's about $6 billion a day of turnover. There's 1,942 listed companies in Korea. So Jae-in-moon became president on the 10th of May 2017 following the impeachment of former President Park. EPS growth estimates are massive, and they probably could be distorted. Now, looking at valuation, though, we can see that the Korea discount remains. I've talked about this over time. The Korea discount has been there for a long time. Part of it has to do with the business groups, let's say, the business groups that are basically dominating overall business and tend to earn a relatively low return. The result of that is that for Korea, the price to book never goes up higher than about 1.4 or something like that. So right now it's at 1.1 with ROE expected at about 11% by analysts. And so let's say 10% or so may be realistic, and about a 1.7% dividend yield. Let's look at the 4 elements that we use, and that shows fundamentals, valuation, momentum, and risk. Now, what we can see is the overall bar, the blue bar, is all the way to the right, meaning it's best relative to other countries in Asia. If we look at fundamentals, it's poor due to the fact that it's low profitability relative to other countries in Asia. Valuation, well, the Korea discount remains. It's super cheap. And momentum, massive earnings growth and good price momentum. And then the main thing is it has a high, on the risk side, if we look at risk related to both price risk and earnings risk, it has a high beta relative to Asia ex-Japan. Sorry about that. Okay, let's look at the sector performance, the last thing in this quick rundown. First of all, infotech accounts for 33% of the market, consumer discretionary 14%, and industrials 13%. The best sector in stock was energy, which is up almost 18%. GS Holdings Corp was up 27%. And the worst sector, this is over the last 3 months, was utilities, just like in other countries in Asia, and Korea Electric Power was down about 2%. So there you have it. Korea is pretty attractive. Of course, never expect that the price to book is going to rise that high, but it's getting so cheap that it may be time to look at it. All right, get access to additional research and articles by joining our free newsletter at becomeabetterinvestor.net/join. And when you do, I will see you there.